And welcome to BQ Prime. I'm Hiral Daria. Joining us on the show today, we have Rajeev Samant, who's the founder and CEO of Sula Vineyards, joining in. The stock has been doing pretty well in the last two trading sessions. Couple of news that's coming in on the back of the Q3 business update. Rajeev, firstly, congratulations on the listing as well as on the fantastic set of numbers that we've been seeing in the third quarter. Your first comments
Thanks,
on the
Neeraj.
same.
Yeah, Q3 was really strong. Q3 is the most important quarter for us. Wine has been, especially premium wine is a fairly seasonal business. So Q3 is of course, the quarter of celebration. It's the quarter of Diwali. It's the quarter of holidays, Christmas, etc. So it's a very important quarter for us. It's usually the highest revenue quarter. And so to have such strong numbers in Q3 and have our highest revenue ever overall, as well as own brands and wine tourism, that was very satisfying, and it bodes very well for the future.
Absolutely. So overall, if you have to look at the third quarter versus what we saw during COVID and pre-COVID, how would you actually compare all of them?
So the great news with us is we are now going past our pre-COVID revenues. So we have, we've normalized and we've gone even past. So we've bounced back really strong. We had, of course, a very strong bounce back coming out of COVID. But the great news with us, with Sula and with wine, is that bounce back is continuing. More and more Indians drinking more and more wine, more and more looking for well-made Indian wines. And that's our story. And we expect that story to continue.
Right. So overall, if we see the brand sales itself is up around 13%. So we've seen strong volume growth on that front. Similarly, tourism business, a growth of around 13% is what we've seen. So clearly there is traction. Now, between own brand versus if you have to compare what you import, where are you seeing higher traction and where are you focusing energies in terms of strategy?
So you're right about the 13% growth, but when you step back a bit, the 9-month growth is 28% in own brands, is 48% in wine tourism.
Wow.
Granted, with wine tourism, you had last year Q1 you did have COVID, so that's not an exact comparison, but very strong bounce back in 9 months. During these last couple of years, Hiral, we've been stepping back from our imported brands business and really concentrating on our own brands. That's really what Sula is about today. We've shown that we can successfully launch new brands and that Indians are really reaching for those brands, our Sula, our Rasa, our Source. So that's really what's come to the fore. We are stepping back from imported brands. That is not as profitable a business, very competitive business, and moving forward, not going to be a priority business for Sula.
Right. And when you talk about the tourism side of it as well, how big are we looking to scale it? Because it's growing really fast. From here on, what's the outlook?
So I've always said, a bet on wine today is a bet on premium alcobev in India. If you're thinking that premium alcobev in India is going to grow, we believe wine is going to grow faster than spirits or beer. In fact, that's what's been happening. That's what we expect to happen moving forward. So if you want to bet on premium alcobev in India today, you could not do much better than betting on wine. And in wine today, the only story, of course, the only listed story is Sula. So that's the way I see it.
Right. So what's that milestone that we want to look at in terms of the tourism business, in terms of expansion? Do you think it's going to be only Nasik, or do you think there's a possibility that we start expanding globally as well?
There's a lot of scope for expanding wine tourism. It's really early days for wine tourism in India. We've already made a start in our Bangalore winery. So that's barely a 2-hour drive from Bangalore on the Bangalore-Mysore highway. So we definitely have growth plans for wine tourism. Having said that, we're going to adopt a more asset-light strategy when it comes to wine tourism. Really, our capex is going to be mostly deployed in building up our production capacity, given that our sales growth is pretty strong. So we have to keep adding new production capacity. That's what we've done in Q3. We've added a 2.5 million liter brownfield cellar at our Dindori plant, which has come on stream for our Q3 harvest. Wine tourism, we expect revenues to continue to be strong, and it's a great way to introduce Indians to wine for the first time. You come, you do a tour and tasting at Sula, you're sold on wine for life. But it's going to be an asset-light strategy. We have partners willing to put up those facilities, those hotels for us, and then we manage and we put in the wine software.
Right. So overall, currently, what's the capacity after an addition of the 2.5 million liters that will come up?
So we were at 14 million. This year we've added 2.5 million, but this is actually a 6 million liter addition is what we are looking at over the next 2 years. So 2.5 this year, and most probably next year will be another 2.5 to 3 million, but we'll have to give you the exact details later. So that will take us, from 14, it's going to take us to more like 20 million liters just over a couple of years.
Right. And overall, if you see from a pricing and realization perspective, how is that panning out? Because a lot of spirit companies, specifically from a malt perspective, were dreading, the way malt prices were moving. Anything that's happening in terms of the wine business on those levels?
So we are very fortunate. We are not dependent on things like aged malts. We don't
Mm.
import any of our raw material. 100% of what goes into our wine is Indian grown grapes, grown by farmers right here in India. And I should point out that 95% of Sula's grapes are grown by small farmers. So it's an incredibly farmer friendly enterprise. Only 5% for our most expensive Rasa wines we grow ourselves. But that's the way that we like the model. And so there has been not much inflation in terms of grape prices. Those are much steadier than when you look at imported malt. We also don't have any foreign exchange risk, hardly any foreign exchange risk. That has been a factor for a lot of others with, of course, emerging market currencies, being weaker against USD, etc. We don't have that risk. So we are on a much surer footing when it comes to that. Having said that, we still have the ability to take price. Sula today is the market leader when it comes to premium wines. And so we have been taking price, but we've been increasing prices lower than the rate of inflation, and still our gross margins are going up.
Right. Overall, with all of this said and done, how important is the factor of premiumization? Because across categories, we are seeing that trend of premiumization which evolves. So for Sula as well, how are we, going on to that path?
Very important. And, we've always said premiumization is a real pillar of our strategy, and we've proven that. So in Sula's case, our more premium wines, which is 700 rupees and up, has gone from, maybe around 50% of our portfolio just 3 or 4 years ago to more like 65, 70% in terms of volume, and even higher in terms of value today. So clearly every year moving more and more towards our premium wines, and consumers are definitely responding positively to that. Today, my priority is those wines above 700 rupees and especially above 1,000 rupees. And as you go up, our cheapest wine in Mumbai today is at 260 rupees. Very affordable. A lot of people reaching for that. Our most expensive wine is a shade under 2,000. As you move from 260 to 2,000, Sula's market share gets bigger and bigger. So we are really the market leaders today in the 1,000 rupee plus category. That's where we are focusing on.
Right. And overall, if you see in terms of the sales part of it as well, I think approximately 13,000 retail touch points is what we have in India. Majority comes from on-trade. Some 20-25% comes from off-trade, and D2C is still around 4%. Do you see that mix changing from here on?
Actually, the mix has really changed to more off-trade. So when we say off-trade,
Okay.
we're talking about retail shops, especially with home delivery getting activated during the pandemic. That has been a huge boon for wine. Wine is something that is enjoyed by women and men. And, women are not very comfortable going to liquor shops or wine shops. So this thing, allowing of home delivery, was a huge boon to wine, more so than for spirits and beer. So we are now seeing something like 70% of our sales coming from off-trade, which is retail, and less than 30% is on-trade. And, when I started Sula, 20 years ago, it was very much more an on-trade thing, and it was very much more a story of five-star hotels. Today, five-star hotels have become barely maybe 5% of our business. You have the standalone restaurants, which is a huge growth business, but then you have retail, more and more people buying their wine to drink in the pleasure of their own homes, watching some Netflix or something like that, Hotstar, and having a glass of wine.
Right. So overall, from a competition perspective, how do exports, really be, come in? And specifically, now that we have FTAs with UK and Australia as well, do you think that could come in as a probably not a negative, but just probably a competition for us to perform better?
So exports have been pretty strong for Sula over this past year. Having said that, our priority is India, India, India. We are make in India and we are sell in India. India is the least penetrated wine market in the world. And as far as I'm concerned, it has the highest growth potential of any wine market in the decade to come. So I must say that my day-to-day work is very focused on India. In fact, we hardly travel internationally these days for exports, trade shows. We will start that once we do believe that some of that growth may be petering off and it makes more sense. But today we're very focused on India. Exports is a second priority for us. In terms of imports, which is what these FTAs are about, you know that an FTA was signed with Australia.
Right.
We are very comfortable with the results of that FTA. We think that our government, our commerce ministry, they've done a great job in a balancing act. And today, we believe that the changes that are coming, the price reductions are going to be at a much higher price level and is not going to impact really the space where most of the Indian wine market and the industry is. So we're very happy with that outcome. If that's the model for future FTAs, we're on a good wicket.
Right. So overall, I mean, FY22, we did a revenue of around 425 odd crores. First half, we've already gone to around 212 crores. What's the milestone that we are looking to cross as a brand from here on?
So, typically second half is much bigger than first half. As I was saying earlier, Q3 is by far our biggest quarter. So look, I think that, it's given that it's strong double-digit growth. I don't really want to talk about specific numbers, but I would like to say that whatever we were projecting at the beginning of the year, things are panning out exactly as expected. In fact, in terms of margin and premiumization, probably a little better than expected. In terms of revenues looking very strong. I don't want to give specifics in terms of growth.
Right. But Rajeev, any specific number that you would say that, say, in the next 3 to 5 years, this is where you want Sula to be from here on, from where it is already now?
Absolutely. So, we have been right now, we're around a 500 crore company with around a 25% EBITDA, give or take. And, I've always said to my team that, the way that things are looking and the way that we should be thinking about it, we should be targeting a 1,000 crore company, not so far in the future. And margins should not be anything less than what they are today. So that's something that we definitely have our eyes on very clearly.
Right. All right, Rajeev. Thank you so much for joining us on the show and sharing those views, and good luck, and hoping to see you soon again.
Thanks, Hiral. Take care.
Thank
Cheers.
you so much. Take it. Cheers. Bye.